Good morning, traders and investors. It's Thursday, November 20th. We got some pretty big price action today. It's based around Nvidia. If we take a look at Nvidia shares, let me just update this daily chart so you can see the current price action. Big pop with some blockbuster outlook for Nvidia, so posting a big move here. If we look at it on the 10-minute chart down below, you can see a huge rally after the close. It's been flagging sideways. So we are going to see the equities market gap sharply higher. Now, Nvidia up over 5%. If we take a look at the S&P 500 futures, let me just go to the daily here. If you look at the futures chart, you can see we are bouncing up more or so into resistance. So it'll be very interesting to see how all this plays out. This is a pretty critical pivot zone. It's been previous highs and lows and going back. So this is also what happens in a downtrend. We tend to see very strong bounces to the upside. And we talked about this yesterday, how gaps to the upside are normal in a downtrend and usually gaps will get sold into. The big question is, does this carry over enough oomph or momentum for people to pile into all tech and drive the whole market up, or is this just going to be kind of a pop that fizzles out and rolls over? Again, it really is just one company moving the entire market and creating that excitement. So we've got to take that with a, just not too seriously at this point. We'll see if there's follow through. I wouldn't be surprised if there's some follow through this morning. A move this big, the NASDAQ up 1.8 in pre-market, that is a huge gap, which is generally not a good thing. But big moves also lure in, FOMO. It creates FOMO. People think they're missing out. A major bottom has been put in. We've already got members thinking this is a bottom, and it's possible it could be. The market's shaking things up and maybe wants to start a new uptrend, but we'll see how the indicators play out and how price plays out. But overall, we've got a series of lower highs, lower lows. Momentum has stalled out, and we'll just see if this market can recover or not today, and we'll go from there. If we take a quick look at the NASDAQ chart, you can see the same thing, big gap up, right up into the 20-day, into a pivot high. So the S&P 500 NASDAQ, very similar in terms of this. And again, we'll just have to see if the whole market wants to rally, if it's a broad market and things firm up, and if a new uptrend wants to start, or if this is just a bounce within a downtrend. So just for a little bit more of a broad market look, let's take a look at the Russell 2000, which are the small cap stocks. You can see very clearly they've moved to the downside, nowhere near where the S&P 500 and the NASDAQ are, kind of in the mid-range into resistance. They're definitely underperforming and having a little bit of a bounce today. They're up about 1/8%. If we look at the Dow, which we don't look at too often, but the Dow, obviously big move to the downside, just refusing to find a bid, other than yesterday it found a short-term bottom, and then today it's getting a bit of a bounce just because everybody's excited about Nvidia, and it's just creating a wave of buying. And it'll be interesting to see if we get a FOMO indicator or not, FOMO reading on our charts today or tomorrow. It is just kind of big tech heavy. I don't know if it's going to be a broad market move if everybody wants into everything. That's typically what you need for FOMO. It might just be some more so a couple of big tech companies, and that doesn't really mean we'll get FOMO. It just means a bunch of people want a couple stocks, not everything. If we take a look at the hot list real quick, you can see majority of sectors are risk off, meaning people aren't willing to put money at risk in that sector. The short-term trends, most of them are down, and the longer-term trends are in a distribution. So there's some heavy selling going on, or they're in a more bearish, longer-term downtrend. So the majority of stocks are not looking that healthy. Typically, if the stock market's in a very strong phase, this whole thing will be green. Money's just flowing in everywhere. And that's not the case at this point. Now, this could turn around and change. This does change fairly quickly when the market does find a bottom and start to rally. Obviously, it needs to be a broad market rally, not just one or two sectors doing the heavy lifting. So we'll see how all that unfolds. Other than that, that's about it for the day. Expect a big gap. Expect potentially to have some FOMO. Now, I'm not sure if we're going to see the FOMO indicator, as I mentioned earlier, but you may feel a little left out or a little FOMO if there's a bounce up 1.7%. There's going to be headline news. Everybody's going to be talking about Nvidia and stellar outlook on business and all that stuff. And that's what makes people feel like they're missing out. And I think they'll be so strong today that one company is just going to make people want to drive money back into the equities market. So at this point, when we look at all the charts, everything is just bouncing up into resistance. And remember, some of the strongest bounces, I think almost most of the biggest bounces, the biggest 1, 2, 3, 4 day bounces generally happen in a downtrend and in bear markets. So that's why shorting can be so dangerous, because these bounces can rip your face off very quickly. and the market becomes very sensitive. When the market's in a downtrend, volatility is up, meaning the VIX is higher. So let's actually take a quick look at the VIX. VIX is down this morning because everybody's piling in, but the VIX has been trading really high. There's a lot of volatility. And when the market does rebound, that's when you get these super strong bounces in the market, and you got to be very cautious. That's why we don't trade inverse ETFs when the market's just having a small correction. Just because the market may be in a downtrend doesn't mean we want to buy an inverse ETF, because it might only just trade down for another bar or two or trade sideways and then start to go higher again. In a bull market, majority of the time, the stock market is going higher. You're not looking to buy an inverse ETF. Every pullback is usually reversed and bought very quickly. But in a bearish environment, when the market is going down, more so in 2022, if we just go back to 2022 here, you can see the majority of the time price is going down. That's when you could buy an inverse ETF. The odds are it's going to keep going lower because the 150 days sloping down, and price has got a series of lower highs and lower lows on a longer term view and a shorter term daily chart view. So today will be also a lot of shorts going to get squeezed out of this market who have been betting on an inverse ETF and betting on the markets falling, and then they get their face ripped off with a bounce on news. So anyways, that's it for now. Talk soon. Bye-bye.